Y'all, what's going on? So today I had the pleasure of speaking at the Traders Roundup table with some of the best female traders that are out there, and it was a great experience. When I spoke, I did give some suggestions on what traders should do in regards to what to look for when backtesting so that they can build their confidence up with their trading and be able to implement their strategy knowing that they've collected enough data to feel confident in it and not be afraid to enter a trade. I gave them a few things to write down, and I want to go over this sheet with you guys because I'm going to share it with you so you can journal your trades on your own. And hopefully, this will help you with your journey and help build that confidence that you need to start not being afraid of putting your hand on that buy or sell button and just letting your trade play out, whether it works or not. So you can go back and analyze the data and see really what it is that you need help with, and also be able to identify the strengths that you have as a trader. So, for example, if you see that every time you get into a trade and it hits a 50% retracement and it always works out, then you probably need to incorporate utilizing your Fibonacci tool when you're trading that particular pair or ticker or whatever it is that you're trading. Now, it could be something else. Let's say, for example, you realize that Euro USD only moves an average of 45 pips during your session. Well, now you know that going for 60 pips may be a little too far-fetched. So you need to reduce that and possibly add two positions, making sure that you're utilizing, again, the proper risk management. So let me show you this sheet, and I really hope it helps you. If it does, please be sure to leave a comment below and just tell me what you thought of the sheet and how it helped you. This is for my economy team, as you can see. But the first thing that we do is we want to identify the ticker. I don't know why this is up here, but it is. So you're going to write down whatever ticker or pair it is that you're trading. I highly recommend that if you are new to trading, you really should just stick to 1 to 2 pairs or tickers or stocks, whatever it is that you're trading, just so you can learn the behavior of these and you really can just become really good at trading it. When you are trading, you want to look at whatever it is that you're trading as like your partner. You want to learn. It's like when you're first dating, right? That honeymoon phase. You want to learn everything about them. You want to know what they like, what they don't like, what, like just everything, right? When you're dating someone, you try to remember everything. It's going to be the same concept when you're trading Forex, stock options, futures, stocks, whatever it is, you guys. So I want you to treat it like that. Now, some of you are probably not good at being loyal, but those that are typically loyal to one pair usually do exceptionally well. The ones that like to dabble in everything seem to have a harder time getting that consistency with their trading flow, and it's just something that I've learned. So being a player is not always good, right? Especially when it comes to trading. So I really want you guys to do this back testing, dive down on what really is working for you, and stick to like strengthening your skills with those. So you're going to identify if it's a call or put. For my Forex traders, this would be a buy or a sell. You're also going to write down the time you entered, how many points or pips in profit you gained from that, and what type of entry it was. Was it a market structure retest? Was it a breakthrough? Was it a flag pattern break? Was it an ascending triangle break? Was it a Fibonacci entry? I want you to identify those. Then next you want to ask yourself, did it hit market structure for your TP? Now, when you're trading, whether it's a buy or sell, the first place you want to see the market hit is at least previous market structure. Now, if we're getting into a buy, it has to at least hit that previous high in order to create a higher high for a trend continuation, as long as it's not a manipulation. So you want to at least have your first take profit set at market structure, just in case that the market is unable, in this case for a buy, unable to achieve a higher high. It then forms a double top, now starting to go down, right? It then goes down after that. Same thing for a buy. You want to at least have your take profit at your previous low, just in case if the market decides to form a double bottom and reverse or create a bigger pullback. Your second take profit is most likely going to be when the market creates a lower low or a higher high, depending on the direction of the trade. Then you want to ask, did it retest the previous day high or low? And the reason why I have that on there is because for the most part, when the market does this, there usually is some form of a trend continuation. So if the market does retest the previous high, we can assume, or hope I should say, that there is going to be a higher high formed for a buy or a lower low formed for a sell. That doesn't always happen, but with stock options, this is very probable. So I like to incorporate that in my back testing strategy. And then what was your stop loss in dollar or points, depending on, well, both of them, I should say. You want to make sure that you're not making your risk too big and that you're also not being too tight. So, what I like my traders to do is to identify what type of risk they're going to use for every one of their trades. And if they start to see that they're giving maybe the trade too much room and they can reduce that risk a little bit, that will allow them to go ahead and basically edit their trading plan. And this is good for them, especially if they've made their stop loss too big. They now have reduced the risk, allowing themselves a bigger reward and not compromising the integrity of the trade because they've done the back testing. Also, you want to document how many contracts you purchased, or for my Forex traders, what was your lot size? So when you start to see consistency, you know that you do very well with an average of such and such contracts or whatever it is that you trade. But I'm talking stock options here. So if you do really good with two contracts and you starting to see you do great, instead of maybe going for more points, you can increase your contract since you know for sure your particular ticker is always going to give you a nice $2 move or a $3 move, and you're able to catch that based on the ATR. Then you want to document your P&L. Of course, percentages are good as well, so that if you're using your broker and you want to utilize a stop loss or a trailing stop loss, you know what percentage to use, and then obviously write down the date. For the date, I would also suggest writing down the day. So, like for example, when I trade, Wednesdays and Thursdays are my money days. Like those are the days that the market is really good to me. Mondays are usually hit or miss, and so are Fridays. And Tuesdays are usually consolidation day or pullback day. So for what I trade, I've learned that Wednesdays and Thursdays are my most profitable, and I always make sure I'm in front of my computer to trade. Even if the market doesn't give me something based off of my data, it has proven to me that I do the best on those. Fridays have proven to not be my best days, so I don't even trade them regardless of what the market is giving out. So this is what I want you guys to go ahead and test out. It is going to help you with your trading journey so much. And as you become more skilled, go back and continue to work on this, and you will learn new things about yourself as a trader, especially as you become more advanced and you just become more aware with how the market moves, what causes your pair to move a lot, just all those little things that serve as catalysts to your trade. So I hope this helps you guys. And yeah, make sure you hit that like and subscribe button if you want more content like this.